Dear children, now we are going to discuss about income and expenditure account. What is income and expenditure account? Income and expenditure account is a summary of income and expenditure of a not-for-profit organization prepared at the end of an accounting year. It is prepared to find out the surplus or deficit pertaining to a particular year. Income and expenditure account is a nominal account in nature in which items of revenue receipts and revenue expenditure relating to the current year alone are recorded. It is prepared following the accrual basis of accounting. It is just like preparing a profit and loss account. Children, in this account, incomes are shown on the credit side and expenses are shown on the debit side. Apart from cash items, non-cash items such as income accrued but not yet received, loss or gain on sale of fixed assets, depreciation, etc. will also be recorded. It helps to enable the members to know the working of the organization and to know whether its income is sufficient to meet its expenses. It can be prepared from a given receipts and payments account. Okay children, what is income and expenditure account? The income and expenditure account is simply another name for the profit and loss account drawn up for a non-trading concern. Okay, in this account, all losses and expenses relating to the current year are debited and all income and gains relating to the current period are credited. Okay children. Then while balancing, we will get one balancing figure that balance is either surplus or deficit. Okay. The balance being either excess of income over expenditure that is equivalent to the net profit of a trading concern. Okay. Or excess of expenditure over income that is equivalent to the net loss of a trading concern. These balance transferred to the capital fund. Okay children, it must be clearly understood that only revenue items relating to the given period are dealt with in this account. In fact, the income and expenditure account is the revenue account of a non-trading concern. Okay children, can you say some features of income and expenditure account? What are the features? It is a revenue account prepared at the end of financial period. It is prepared by matching expenses against revenue of the period concerned. All expenses are shown on the left hand side, that is on the debit side. All incomes are shown on the right hand side, that is on the credit side. Okay children, next. Both cash and non-cash items are considered. For example, depreciation. All capital expenditure and incomes are excluded. Only current year's incomes and expenditure are considered. If incomes are more than the expenditure, the balance is known as surplus. And if expenses are more than the income, the balance will be known as deficit. Okay children, next topic, steps in preparation of income and expenditure account from receipts and payments account. Okay, let me explain the method of preparation of income and expenditure account. Children, in examination, usually a receipts and payments account is given and it is required to prepare the income and expenditure account and the balance sheet. In preparing the income and expenditure account, you should proceed as follows. Do not take the opening and closing balances of the receipts and payments account. Children, you will get one receipts and payments account, but you don't take the opening and closing balances of the receipts and payments account. Okay, then do not take capital receipts and capital expenditure. Okay, you should take only revenue items. Okay, do not take even revenue receipts and payments if they relate to the preceding or succeeding period. Okay, you should take only the transaction which affect current year. Okay. Then make adjustments for accrued incomes, unpaid expenses, incomes received in advance and prepaid expenses. Okay, we prepare income and expenditure on accrual basis. Okay, so you should make adjustments for accrued income, outstanding expenses, income received in advance and prepaid expenses. Okay, children, make provision for bad debts, depreciation, etc. if required. Okay, show income on the credit side and expenditure on the debit side. Okay. Then transfer the balancing figure, either surplus or deficit, to the capital fund. Okay, children, the balancing figure of income and expenditure account is either surplus or deficit and will be transferred to capital fund in the balance sheet. If the total credit side of income and expenditure account is more than the total of debit, the difference represents surplus. If the total of the debit side of income and expenditure account is more than the total of credit side, the difference represents deficit. Okay, this balancing figure transfer to the capital fund. Okay, children. The format of income and expenditure account is given here. All expenses and losses are recorded on the debit side. All incomes and gains are recorded on the credit side. Children, both cash and non-cash items are recorded on income and expenditure account. What are the non-cash items? Loss on sale of asset, depreciation, profit on sale of asset are the non-cash items. While balancing income and expenditure, we will get the balancing figure. The balancing figure may be either surplus or deficit. Excess of income over expenditure is surplus. Excess of expenditure over income is deficit. Okay, children, you have learned receipts and payments account and income and expenditure account. Can you find the difference between receipts and payments account and income and expenditure account? First point, on the basis of purpose. Children, what is the purpose of receipts and payments account? Okay, receipts and payments account is prepared to ascertain the closing balances of cash and bank. It is prepared to know the cash receipts and cash payments. Okay, children, what is the purpose of income and expenditure account? Income and expenditure account is prepared to ascertain the surplus or deficit of the not-for-profit organization. It is prepared to know whether there is an excess of income over expenditure, what is it? Surplus, or an excess of expenditure over income, that means deficit during the current period. Next point, nature of account. On the basis of nature of account, Receipts and payments account is a real account. Children, do you know the reason? Receipts and payments account is a summary of cash account. Cash receipts are recorded on the debit side and cash payments are recorded on the credit side. So, receipts and payments account is a real account in nature. Income and expenditure account is a nominal account. Okay. Income and expenditure account is similar to profit and loss account. All expenses and losses are recorded on the debit side and incomes and gains are recorded on the credit side. Next point, basis of accounting. Receipts and payments account is based on cash system of accounting. All cash receipts and cash payments irrespective of the period are recorded on receipts and payments account. But non-cash items are not recorded. Income and expenditure account is based on accrual system of accounting. Non-cash items like outstanding expenses, depreciation, etc. are also recorded. Next point, opening and closing balance. Children, receipts and payments account begins with the opening balance of cash and bank and ends with the closing balance of cash and bank. But the income and expenditure account does not begin with any such balance. Income and expenditure account ends with surplus or deficit. Next point, nature of items. Receipts and payments accounts contains actual receipts and payments irrespective of revenue or capital items in nature. But income and expenditure account contains only revenue items. That is, only revenue expenses and revenue incomes are recorded on income and expenditure account. Okay children, what is? While the receipts and payments account contains both capital and revenue items, income and expenditure account contains only revenue items. Next point, period. All cash receipts and payments made during the year pertaining to the past period, current period and subsequent period are recorded on receipts and payments account. Income and expenditure account contains only the items relating to the current period. Okay children, let me explain once more. Receipts and payments account is a real account, but income and expenditure account is a nominal account. Receipts and payments account is a summary of actual cash receipts and payments of a particular period. Income and expenditure account is a summary of income and expenses of a particular period. Next point. Receipts and payments accounts include both capital and revenue items, but income and expenditure accounts includes only revenue items. Next point. Receipts and payments accounts includes all cash receipts and payments irrespective of the period to which it belongs. But income and expenditure account includes only incomes and expenses of a particular period for which the account is prepared. Next point. Receipts and payments account does not include non-cash transaction, but income and expenditure includes both the cash and non-cash items. Next point, receipts and payments account begins with the opening cash and bank balance and ends with the closing cash and bank balance. Income and expenditure does not have any opening balance. Closing balance may either represent deficit or surplus. Okay children, thank you.